Hello friends, from this video we are going to see the introduction of security analysis and portfolio management. Let's go to the concepts directly. The title includes mainly two terms. One is security analysis, number two is portfolio management. Therefore, we are going to see what is security as per investment, what are securities, number 3, what is security analysis, and we also going to see what is portfolio means, and we also discuss about the introduction of portfolio management. Let's see the meaning of security. In investment, security means any financial instrument or financial asset that can be traded. So what is trade? Trade includes buying and selling. Alright. Therefore, in other words, security is a financial asset or instrument that has a value and can be bought or sold. Clear? Some of the most common examples of securities are given here: stocks, bonds, mutual funds, exchange traded funds, derivative, hedge funds, etc. I believe you get some clarity on it. Alright, now let's discuss about security analysis. We have already seen security as a tradable financial instruments. So, what would be the security analysis? In simple words, it is analysis of that tradable instruments that which we discussed, which includes analysis of share, bonds, debentures, etc. Now the question will arise, what kind of analysis? Yes, the analysis includes the process of estimating return and risk. I repeat, return and risk for individual security. So we need to know what is risk in investment. In investment, risk is a probability of losing some or all of the original investment, and return explains the amount you receive or the money you receive from the investment, or it is also called as the expected return. Therefore, security analysis means calculating risk and return of tradable instruments like share, bonds, debentures, etc. Guys, it is also important to discuss how are we going to analyze the securities or the value of securities. There are two important methods. One is the fundamental analysis and number 2 is the technical analysis. What is this fundamental and technical analysis? Let's see a glance about it. Yes, the fundamental analysis is a method of evaluating the stock by measuring its intrinsic value, and it studies mainly the overall economy or industry, and it also analyzes the company in particular. For example, evaluating the earnings, expenses, assets and liabilities, or return on equity, return on asset, earning per share, price earning ratio, etc. Whereas technical analysis works with stock price and volume. It uses charts to identify patterns and trends that suggest what a stock will do in future. For example, it uses mainly the tools like simple moving average, relative strength index, etc. This is a pictorial representation of fundamental and technical analysis. Guys, so far we have discussed about security analysis. Now we move into next important concept called portfolio. What is portfolio? Portfolio means any combination of securities such as stocks, bonds, fixed deposits, etc. The main objective of portfolio is the diversification of risk. While constructing your portfolio, you can choose different classes of assets with the objective of maximizing the return and minimizing the risk. This pie chart here represents the portfolio diversification based on risk, which includes 4 combinations such as high risk, low risk, medium risk and risk free. This picture is the evidence of portfolio construction based on risk, high, medium, low and risk free. Here you can see equity, real asset, commodities, FD, bonds and mutual funds. Here equity, real estate, commodities can be of high risk securities, mutual fund is a medium risk securities, bond is with a low risk, and of course obviously the fixed deposit is risk free. Now we move on to the portfolio management. After seeing what is portfolio, now you can tell what is portfolio management. In simple words, portfolio management is managing your portfolio. And portfolio is a combination of securities belongs to an individual investor or group of investors having certain goals, and management in general consists of all activities concerned with trying to accomplish the particular goals of the portfolio. Thus, portfolio management basically involves a proper decision making regarding what to buy or sell, also reduce risk and maximize the return. And here is a definition. The portfolio management is a decision making process which has to do with choosing and revising portfolio of securities to satisfy investors' objective. Guys, I stop with this. We will discuss other concepts in next video. Have a great time. Thank you so much for watching.